Michael, good to see you. Thanks for joining me on the podcast today.
Yeah, happy to be here.
Crypto, that's what we're going to talk about today, and even specifically maybe dive into the world of Bitcoin. I know it tends to be quite confusing for a lot of people. So maybe we can start this entire conversation out with a 30,000-foot view or synopsis of what in the world are we even talking about when it comes to this whole crypto world and Bitcoin and Ethereum and all these others as well.
Sure. Why don't we start with a fundamental problem? The fundamental issue is, as a human being, do you have property rights? If you work your entire life and you've saved everything you've ever made, how do you store that life energy? How do you store your life's work? And how do you keep someone from stealing it from you? At the end of a barrel of a gun? How do you carry it with you if you have to flee for your life from a hostile regime? If you live in Afghanistan or Iraq or Syria, and you had to leave, or you had to leave Cuba, how do you take your money with you? And then how do you store that energy and give it to your grandchildren? You want to leave a legacy and you want to give it to your kids or your grandchildren. How do you keep it? So it's this fundamental issue of property. The reason people came to the United States was in pursuit of they call it life, liberty, happiness, but really property rights. They left Europe because if you're the wrong religion, you couldn't have a job, you couldn't have a house. The Huguenots fled for that reason. The Jews fled the Spanish Inquisition for that reason. My family came to the New World in 1736. They were Swiss Palatines. They were Protestants in a Catholic country. And it's, if you're just the wrong sect, the wrong person, and the government just decides you can't own anything and you can't do anything, you're herded into a ghetto, and that's the end of you. So that the human condition has been that search, the American dream, the farm, how do I live happily ever after? So that's the fundamental issue. Now let's think about how do you lose your life? Either inflation or confiscation. Let's talk about inflation. I live in a house that costs 305 times more money today in the year 2022 than it cost in 1930. 305 times.
Right.
Okay, so what's the inflation rate? Right. If you do the calculation, go ahead.
I'm sorry. I was just going to say, which is a beautiful thing if you own property. If you don't, that's where it becomes a problem.
Well, the point here is, if I gave you $100,000 in cash in 1930 and you put it in a safe deposit box and held it for 92 years, you'd have 100 grand. But if you actually bought this house, you'd have a house worth $30 million.
Right.
Okay. Now, what's the inflation rate? Well, a lot of times people tell you the inflation rate's 2%. It's not. The inflation rate in the US dollar for 100 years is 8%. Okay. When it gets to 7 to 8%, it means your wealth or your economic energy is cut in half every 10 years. It means that in this particular case, the value of the dollar has fallen by 99.7% over 90 years. Now, most people it doesn't register with it. But if I told you that if you had money in a bank, you would lose 99% of your wealth in the course of your lifetime, like that's just how bad it is. By the way, that's the best it's ever going to be, Ryan, because the US dollar is the strongest currency for the last 100 years. So what it means is the winner lost 99% of its value. The losers lost everything. Okay, so if you're a wage earner and you're generating cash, if you're running a cash business and your strategy is I work as hard as I can and I take my excess money and I store it on a mattress, or I keep it in a box, or I put it in a bank, right? You're in essence having your life force sucked out of you by inflation. Now, that 8% a year, right? That's understated by the government. The government will tell you the inflation rate is 2% because they calculate inflation based upon CPI, the Consumer Price Index.
Right. It's
So
manipulated data, essentially, is what it is. They're not going to calculate cost of milk. They're not going to calculate gas. They're going to manipulate the data to keep it low, of course.
if I create a list of things that don't go up in price and I calculate the inflation rate of them, it'll be low.
Right. Right.
Now, for example, the CPI right now is officially 7.9%. But yesterday, the Case-Shiller index reported by the Wall Street Journal was 19.2%, which means that if you wanted to buy a house in a major city in the United States, your inflation rate was 19.2%. Now, the political spin on that would be, hey, homeowners are great. Their home is worth 19% more. But if you're a first-time home buyer, then the inflation rate is 19.2%. Unless you're actually getting a raise of 20% a year, you can't keep up. So the road to serfdom is working exponentially harder for a currency growing exponentially weaker. The currency's been growing. The money supply is expanding at 8%. Therefore, the price of all scarce desirable assets like a Miami Beach home or house in the Hamptons or Picasso or a share of stock in a successful company, those are all going up at that rate. The S&P index,
or even rural Maine. I mean, that's where I live, and my wife and I bought this home 3 years ago, and like it's a beautiful thing. I'm looking at my property values, but also I don't really care because it isn't real. Like I'm not going to sell this right now. Maybe if something comes up, maybe we'd buy, but probably right now we wouldn't. But
aren't you glad you bought 3 years ago?
Of course, 100%.
Okay, so now let's think about this from the point of view of an investor. If I told you that the money supply was going to expand at 8% a year, and if the supply of decent housing is constant, logically, that means the price of the house goes up 8% a year. If the price of the house is going up 8% a year, what's your best strategy? Well, don't wait 30 years and save cash and then buy the house because you won't catch up. You buy the house before you have the cash to pay for it. You take a mortgage. If you're lucky enough to be able to borrow the money to buy the house, if you're borrowing money at 3% interest and you're buying a house going up 8% in value, then in fact, you're getting a plus 5% yield on your investment. You buy $1 million of property, you pay $30,000 in interest, you get an $80,000 appreciation, you make $50,000 in an unrealized capital gain every year, right? So I've just described the strategy of leveraged long property. If you know that the money supply is going to inflate at a rapid rate and you're a smart business person, you would go and you would borrow as much money as possible. First step. Second step, buy the highest quality property, commercial real estate, a home, a sports team, football team, a Picasso. Yeah. Maybe you buy a share of stock and pick the right stock. So how do you get wiped out in that strategy? Well, you buy crappy property that doesn't go up in value. Like not all property is equally desirable. I mean, there's infinite land in the Rocky Mountains, right? Fly over the United States and you see everybody kind of lives on the East or the West Coast. So if you don't buy the right land, it might not be good. And the second way you get wiped out is if you take this loan where you get forced liquidated, right? If the bank's not going to mark your property to market every minute of the day, if you've got a 30-year mortgage and they're not going to come and mark down your house and foreclose on the loan, then you're good. So get the right loan, get the right property, and just wait for the money supply to expand. Most rich families in New York City, that's what they did. If your grandfather bought a city block in Manhattan in 1900, you did fine. So that's the setup, right? And the human condition is if you don't own property, if you're working class and not property class, then inflation is draining money away from you and is putting it in the pocket of the property class, right? So there are winners and losers. And if you happen to be, yeah.
Well, I was just going to ask you a question on the first thing you led off with was this transferability of wealth, really. Like, how do you maintain it? How do you keep it? How do you transfer it?
Right.
I think what a lot of people get concerned with, and let me be full disclosure, like I own quite a bit of my portfolio is actually in crypto between Bitcoin and Ethereum and some others. I think that one of the concerns that I see a lot is that, you know, if we're in this dire situation within the world and all of our money is basically zeros and ones, which it is now, let's be honest, it is now. But I think a lot of people have concerns about tying up money in crypto, knowing that if things go south, like I'm not going to trade you, Michael, if I need some food in the zeros and ones on my bank account, because frankly, I won't even have access to that. Have you seen that?
I don't think that you can buy anything, right? I think that you have to decide what you want to own. So for there's 17,500 cryptos. There's only one that I own, which is Bitcoin. So we could discuss the others, but it's kind of like, where do you want to own property? Do you want to own it in Maine or Manhattan, or do you want to own it in Moscow? Right? There's some place that, do you want to own it in Zimbabwe? Do you want to own it anywhere in Africa? Pick a place in South America you want to own property. So if you consider the basis of Bitcoin, I'm going to focus on Bitcoin right now. We talk about crypto after that in a bit.
No worries.
The idea of Bitcoin was, can I create a high quality property in cyberspace, a digital property? Because if I have my life savings, I can either dump it in my house, that's fine, but you can't take the house with you, right? And you can't necessarily generate any yield on the house. After you've got a place to live, and maybe you don't want to put your money in a house in Afghanistan, right? If you live in Afghanistan, right? Maybe it's an easy decision for somebody in Maine. It's not a very easy decision for someone in Syria, Iraq, or Ukraine right now. There's 4 million refugees coming out of Ukraine, right? They can't,
or even potentially here. I mean, there's risk here too. Let's not pretend there isn't risk of buying property in, somebody might have said 40 years ago, 50 years ago, buy property in Detroit. And now you look at it and think, maybe not so good of an idea.
Yeah. So there's a quest for portable property, right? What's the best portable property? Well, I mean, in theory, it's, there's gold for 10,000 years. The problem with gold is it's kind of hard to take gold through an airport. You don't really want to store bars of gold in your house. It makes you a target. People might know. You can't generate rent. You can't rent out your gold bar. No one's going to pay you $10,000 a year to rent a $100,000 gold bar to hold, right? That's not going to happen. So
you're talking about loans. Is that what that would equate to? Is loaning out that money with a rate of return? Is that what you're saying?
What I'm saying is you can't rent it. If you got a second house in Maine, you could rent the second house to someone that wanted to stay in Maine for the summer, and it would generate income for you, right?
Tracking. Sure.
Right. If I bought a warehouse in New Jersey that, held industrial supplies, I could rent the warehouse out. So the reason that gold is not ideal property is there's no yield on it. It's very hard to mortgage and it's very hard to rent. So people then step up and they buy commercial real estate, a building, a warehouse, a second home, an Airbnb. Okay. Well, the benefit is I can mortgage it and I can rent it. But the problem is, it's an old idea. People have been doing it for thousands of years, right? You didn't invent anything new. B, it's not a technology idea. You're not going to see 8 billion smartphone users, dematerialize their commercial warehouse and move it at the speed of light on an iPhone. It's not a tech idea. And the third problem is there, before you get to that third problem though, is there value though in it not being a tech idea, meaning that we've been doing it for, like you said, thousands of years? Is there some safety and security and a proven track record of success in that, which might make it appealing? Absolutely. If we're having this conversation 20 years ago and you said, Mike, how do I protect myself against inflation? I say, go buy some real estate. Right. And in fact, lots of people have it. It's probably the best idea in the 20th century. If you've got good real estate and you like it, am I telling you to sell it? No, right? The question is, what is crypto? Why does Bitcoin exist? And so the answer to what is crypto and why did Bitcoin exist is, after people thought about gold and they said gold doesn't generate yield and they went to real estate, they thought about real estate and they said, how can I improve that? Well, I mean, this is a good idea for you to own real estate in New Jersey. How good is it an idea for you to own real estate in Ukraine or Russia right now? What if you have a warehouse in the outskirts of Moscow right now, right? The point is, What if you're what if you're a rancher in Rhodesia when the regime changed? How good was that, an idea to own real estate in Rhodesia? The country doesn't exist anymore, nor would your real estate exist. So real estate doesn't solve the problem for everybody. It definitely doesn't solve the problem for 400 million or refugees, right? Or a billion people in a combat zone. So now, what is the next idea? It's digital property. What if I could take your hotel, snap my fingers and dematerialize it and put it in cyberspace, and it became a digital hotel? Okay, why would it be better? Well, instead of 1,000 rooms that I rent out to the highest bidder in Miami Beach, I could rent out the 1,000 rooms to people in London, Paris, Tokyo, New York. I could rent out 100 of the rooms in Tokyo and 100 of the rooms in New York and 100 of the rooms in Paris. Now I get a little bit cuter. I can have a computer rent out the rooms. Then I get a little bit cuter and I have the computer rent out the rooms by the hour. Now I get smarter and I rent out the rooms by the minute. Now this is a very high velocity hotel. You couldn't do this in real world, but you can do this in cyberspace. So now I have a digital property. Why is a digital property better theoretically? Theoretically, it's better because you don't have to buy flood insurance on it, right? There's never going to be a tornado that'll wipe it out. It doesn't have the maintenance requirements of a physical piece of property. It's theoretically better because I can move it at the speed of light. It's theoretically better because I could split it into 1 million pieces, send it to 1 million people, and then fetch it back on the weekend every hour, right? So it's theoretically better because it's virtual. It's not physical. It's also theoretically better because nobody knows I have it. So when I walk past your hotel in the middle of Kiev and I want your hotel, I just put a gun to your head and take the hotel, or I blow it up. But it's hard to blow up your digital hotel, and it's hard to know that you have it. So it's much more confiscation resistant. Go ahead. What's your question?
Well, so I was going to say, let's take that scenario of this digital hotel. Number one is like, how do you sell a digital hotel? That's I think an obvious question. Number two, doesn't it devalue the hotel? Because instead of actually owning the hotel, now, Michael, you who does not actually own a physical hotel can create one in cyberspace. XYZ can create one in cyberspace, and 10 million people can create the exact same thing in cyberspace. So doesn't it actually devalue the tangible property that actually exists in reality?
Yeah, there's two thoughts here. One, instead of having to store all your money in property, like buying a home and monetize the house or monetize the commercial real estate, I could sell the second home and I could buy a Bitcoin. And if I sell the second home and the third home and the fourth home, and I buy 3 Bitcoin with it, the price of second, third, and fourth homes go down in value, in price, right? The price of the Bitcoin goes up. What you've got is a surge of capital that moves from the physical realm to the digital realm. This is a good thing for the society, because if everybody has to store their excess money in property, then the price of houses go up 20% a year, and then no one can buy a house, right? Pretty soon you've got a class of real estate property owners and then people that have to rent, right? Because if you're not rich, you can't afford to own the property.
You're talking about supply and demand here.
Yeah, I suppose you could think of it as supply and demand. What you could just say is if I increase the money supply by a factor of 10, I hyperinflate the money supply, but I keep the products, the cars, the watches, the houses constant. And all you can do is buy cars, watches, and houses. Then what do people do with their money? They go and they buy cars, watches, and houses. And then what do you read? Well, you read there's a shortage of luxury cars, there's a shortage of watches, there's a shortage of houses, and the prices adjust, right? And that's what's going on right now in our economy for the past 18 months. Basically, everybody takes their excess money and they buy something that's tangible of value. And we have monetized, we have put a monetary premium on the cars, watches, and houses, right? And so their utility value is X, but their overall value of the price is Y. It's double X, because people are just looking for a place to park their money, right?
Which I think is what gold is. Like, gold isn't, I mean, maybe outside of some microchips and things like that, and maybe some minor technologically utilized reasons, like gold is gold. There isn't a whole lot of utilitarian value in it other than you can wear it in a Rolex.
Yeah. So if the price of gold went to its utility value, it'd probably go to like $700 an ounce. And
Right.
right now it's
Exactly.
close to $2,000 an ounce. And the difference is that monetary premium, what we call a store of value. I've got $5 trillion. I got to put it somewhere. So what if I put it in the bank earning 0% interest? Well, you're losing 15 to 20% of the value of your money every year. Okay, that's the currency debasement or the collapse. What if I put it into debt, like sovereign debt? Well, a bond's yielding 2%. The money's losing 18% of its value a year. You got a negative 16% real yield. That's awful. So people don't want to put their money in currency or currency derivatives. So I either got to go buy stocks in the stock market, and that's why you see meme stocks explode, right? You see the stock market advance in 18 months, or I got to go buy houses. That's why houses are up 18% or 19% year over year. Or I got to go buy luxury stuff. That's why you can't get luxury watches. And that's why there's a 2-year wait for the next Ferrari, right? Because people are buying everything they can buy because the money is collapsing. Let me take it to the extreme. If I told you your money was going to be worth nothing in 12 months, wouldn't you just go buy anything?
Anything and everything.
Food? Anything, right? So I'm describing the phenomena of monetizing a utility. The benefit of Bitcoin is the dominant crypto asset network. It is the king of the asset networks. It's the most secure, most well-known, most well-engineered, and it's backed by the strongest network of miners and the strongest network of nodes and the strongest network of holders. So that's why it's interesting. As a money, it makes great sense because there's no utility value for anything else. So if you're monetizing a Bitcoin, you're not going to starve anybody. It's not like monetizing corn or monetizing oil, right? You're basically buying a digital synthetic bearer instrument that has no other utility value. It's better than gold because I can loan it out. I could take 1 Bitcoin on a Saturday afternoon and I could loan it to somebody in Singapore and get paid interest on it. And if somebody in London wanted to pay me a higher rate, I could move it to London. I'll never do that with my Airbnb in Bangor, Maine. I won't be able to move.
How are you going to do
London,
that?
right?
Right.
So the audience of people that will rent my Airbnb is limited to tourists in Maine in the summer. But the audience of people that will rent my Bitcoin is everybody on Earth. Okay, so it's a more easy to mortgage and easier to rent out asset. That makes it better property than physical property, and of course, it makes it much better property than gold because I can send the money around the world in its virtual form, whereas with gold, I probably wouldn't be able to get it across a border without it being seized, under the best of circumstances.
I think where people get hung up, and I do too, is, and so, that's why I diversify where I put my money, but you can't spend your summers in vacation land in a Bitcoin. You can't eat Bitcoin, right? And so like a commodity, or you can't fuel your vehicle with Bitcoin. I mean, you can use it to purchase what you need to live, but I think the biggest concern is people see it as a disappearing, or it just not being even real. Like, who's to say what a Bitcoin is worth? Is it just a collective, we agree on it as this is what it's worth?
Well, I mean, the key to understanding Bitcoin is it's digital property and it's perfected gold. So there's only 21 million Bitcoin that will ever exist. So the most important thing about Bitcoin is knowing that nobody on Earth can create more than 21 million of them. That's the most important thing. And if you understand the protocol and the way the network works, you understand that no company, no individual, no nation state, no one can find a way around that. If you could create more, it wouldn't be scarce. So the idea of it being 21 million is important. Beyond that, you got to look at it as a replacement for a second house. You're not going to live in your second house. You're living in your first house. So you should probably keep your car, right? Keep your first house, keep food, keep all your primary assets. And if that's all the money you have, then you're done. But after you've accumulated more, then you've got to choose. Do you want to buy a share of stock? Do you want to buy a piece of Bitcoin? Do you want to buy some gold or silver, right? Do you want to buy an investment property? And when you consider it versus all those other assets, then you start to understand it better. The reason that you would prefer to have Bitcoin to gold is because Bitcoin is hard capped at 21 million coins, and gold is increasing in supply every year because gold miners keep creating more of it.
We just mine it. Sure. Right.
So if you're buying, it's like if you bought a piece of property and I said, well, I'm just going to create more of it every year forever. Well, then your share of that asset keeps deteriorating, right? You know, you don't want to do that. You want to buy the one of one. So Bitcoin is as a scarcity. Everything else you can buy as a commodity. We keep making more of it. And the higher the price goes of the commodities, the more incentive to make more. So gold, silver, land, industrial property, all these things, I mean, you make more of it. Now, not the physical land, but the point with land is, if you look at Manhattan, you look at, say, Dubai, when the price goes up per square foot, people will literally reclaim land from the ocean. And of course, they will build straight up.
Right. They'll build up, they'll build out, they'll put dirt and fillers. I mean, they'll make more land available that maybe was not accessible before. You know, I drive around Maine all the time and I see all sorts of land that is just owned by the state or federal government. Like some of that will become available. You know, these things happen.
Yeah. So you want a hard asset where it's totally capped at 21 million. And then when you're buying a Bitcoin, you're buying 1/21 millionth of all the energy in the network forever. That's the big idea, right? When you're buying 1/21 millionth of Apple stock, is that all there's ever going to be? No, they can create more shares, and the world can create more companies, and the world can create more companies that are like Apple. You know, and so not only do you know it's not scarce, but the other problem is there's risk, right? You just, if you're buying companies, there's risk from the employee base, there's risk from the management team, there's competitive risk, there's tax risk, there's regulatory risk, all sorts of interesting risks because they have to do complicated things to stay in business. So a company, if you knew that it was going to be the digital monopoly for the next 100 years and no one would screw that up, then maybe it's okay. But that's a big leap. Yeah. So the next best idea is, like, I go to Manhattan and I buy some real estate. Well, do I buy the building? Do I buy the company in the building? Or do I buy the land underneath the building? Well, if I just buy the land underneath the building, the pure property, that's the least risky thing because they could knock down the building and they can replace all the companies in the building and the land still has value. Right there, I'm kind of what's the risk? The risk is everybody leaves Manhattan and they all move to LA, right? Or Manhattan is not that desirable a city in 100 years. So you've got the city risk, but it's the least risky proposition when you're buying the underlying property. So what if I wanted to buy a block of Manhattan in cyberspace? There's a place in cyberspace that's equivalent to Manhattan. It's Bitcoin, and there's 21 million blocks, and you can buy one. And in cyberspace, there's a value to be able to have that property because anybody that wants to do business in cyberspace can benefit from getting their hands on that digital property. Apple Computer could use it, Google could use it, Facebook, Twitter could use it. Every wealthy person on earth could use it. If you're if you're an oligarch in China or Pakistan or Russia or Ukraine, and your choice is own a building or own a yacht or own the equivalent amount of Bitcoin, well, the equivalent amount of Bitcoin is a lot safer than the building or the yacht. The property you only own as long as you control the country, but the Bitcoin is in cyberspace. And so it has a certain universal appeal to everybody in the world.
So, but let me ask this, let's just, let's bring it back and say, digital space. So when you say that, I immediately think of a website. So I own, for example, orderofman.com. That's a digital environment. I own it. It's mine. If somebody wants it, they can't have it, or they're going to have to pay me a premium to own it. But there's nobody out there, there's nothing out there to keep somebody from buying, orderofmen.com and clone, which I own as well, but just for the sake of argument, cloning exactly what I've created and then replicating the entire process. And now all of a sudden my orderofman.com is devalued. I hope that makes sense in the context of a digital currency.
Yeah, the question is whether or not the network that you're buying into is the winner. So for example, what if someone copied Bitcoin? Would the money stay on the Bitcoin network, or would it go to the second network? And if the year was 2009, it was January 3rd, 2009, that's when the network launched. And the next day there were 10,000 copies, you wouldn't really know which of the 10,000 was the winner.
Right.
Okay. But if you could roll the clock forward 12 years or 13 years, what if people did copy it 10,000 times? And what if they all failed? And it grew from nothing to $850 billion in money. Well, after 13 years and after 10,000 attempts to copy it, after everybody had decided this is the winner, you'd have a lot more confidence that this is the winner. The network is stronger. You want a real world experience, a real world parallel. Coca-Cola. Like, for example, what's to keep someone from copying Coca-Cola and selling carbonated beverage? Well, they've
nothing.
had for 120 years to do it. Have they done it? Sure, they've done it. Well, who won? Coca-Cola won. Is Coca-Cola worth nothing? No, Coca-Cola is pretty valuable as a brand. Why is it valuable? Because over the course of 100 years, it's been burned in everybody's head that this is the winning, the dominant beverage brand. And if I destroyed all the Coca-Cola factories and all the beverage and everything, every physical instantiation of Coca-Cola in the world today, would the brand have value? And the answer is yeah. It would still have value because I'd have to murder 8 billion people, right? If I killed all 8 billion people, I would get rid of Coca-Cola in their head, right? And maybe it has no value. But as long as the brand is out there and everybody in the world knows this is the safest thing to drink, then the brand has value irregardless of the physical assets in the real world. Now, it turns out that Coca-Cola has two values. One is the brand, but the other is the physical distribution center. It's got bottlers everywhere and relationships everywhere. By the way, if I go into a restaurant and they said, what do you want to drink? And I said, I want to drink a Dr. Pepper. Like, we don't have it. I said, I want to drink a Diet Pepsi. We don't have it. I want to drink blah, blah, blah. We don't have it. Well, what do you have? Diet Coke. Okay, I'll drink that. Right. It's the point where hundreds of thousands of restaurants are all hardwired to serve you Diet Coke. So now when I go into a restaurant, I don't even bother to ask for anything other than Diet Coke because I know I'm just going to get denied, right? That's the network effect plus the distribution plus the brand. Now let's talk about Bitcoin. What's the equivalent? Well, everybody knows what Bitcoin is. Everybody, right? It's the most famous, crypto brand in the world. But second, it's like the gold standard, right? Everybody knows what gold is. Took a while to get there. The second thing, though, is there's like a $20 billion Bitcoin mining network. That's a set of special purpose equipment run by Bitcoin miners everywhere in the world that are throwing up a hash wall in order to defend the network. Now, if you wanted to create something which was as good or better, you would have to come up with your own $20 billion, but it'd probably take you 4 years, probably 10 years. If you had 10 years and you had $20 billion, you could attempt to do what Bitcoin is now. But of course, Bitcoin won't be what it is now in 10 years.
It'll be ahead. Sure.
And let's say Apple Computer and Facebook and Amazon and Microsoft all got together and dollars of their money so they can create a duplicate to Bitcoin, and they're going to put all their effort behind it. Still wouldn't work. And the reason it wouldn't work is because those are securities, they're companies, and legally they can't create property. The distinction between a property and a security is property is common to the people, like gold or oil or land. And that means it's beyond the control of any company. That's almost the definition of property. If Mark Zuckerberg, it's an important securities law distinction, but it's very important ethically and legally and technically for why Bitcoin is important, or why, to understand why it's the winner. If Mark Zuckerberg creates his own currency, he runs a company, it becomes a security. Okay, it's unethical for a public figure to endorse a security. Like if I'm the mayor of Atlanta, I can't say to the citizens of Atlanta, I think you should all buy a share of Facebook stock, right? Because that's a conflict of interest. I'm pumping a stock, right? It's pretty obvious. So if you use just basic ethics, you're like, well, I can't really have a conflict of interest. If I'm the mayor of Atlanta, though, and I said, I think everybody should own a home. You understand? That seems kind of,
sure.
You should own a house, a chicken in every pot, a house, and a car. Those are three pieces of property, which is ethical for me to endorse. I can go further. I can say, I'm going to give you a subsidy on your tax return to help you buy a house. That's ethical. Now, Ryan, what if I said, I'll give you a tax refund to buy Apple stock? Yeah, you understand how that,
or to buy a house
line
in a subdivision that I own. It's like, all right, obviously there's a conflict here.
Okay, so what you've got is a network that organically grew without any large company pushing it. Like Bitcoin traded with no price for a year and a half. When it traded for a penny or 2 pennies. There was never a venture capital investment. There was never an IPO. There was never an ICO. There was never a big corporation behind it. Nobody thought it would be worth anything. It had to grow and monetize itself in this random chain reaction so that it would be free of any nation state controlling it or any company controlling it. And that's a very difficult thing to do. Now, it could have been any of 10,000 tries. People tried it 50 times before Bitcoin. They all failed. They tried it hundreds of times in the year after Bitcoin. They just didn't take, right? There's got to be a winner. This is the winner. It's a path-dependent winner of the digital property competition. So when you're buying into the Bitcoin network, you're buying the dominant digital property network, right? It's not the same as deciding to invest all your money in Apple stock. That's a security. It's not the same as investing in Mikey coin. If I launched Mikey coin or Saylor coin or something, that's a security, right? Those things are investments. You can
like
invest
an NFT,
in them.
Like an NFT would be more of a security. Got it.
Yeah, they're investments. And it's not that you can't make money in investment, but the point is a nation state and a mayor and a governor can't endorse a security without it being a conflict of interest. And if you do, and if it becomes a security, like right now, if you were to say to me, what do you think will happen with Bitcoin, Michael? I would say, I think it's going to go up forever. Right. And if you said, what do you think will happen with your MicroStrategy stock? Like, I have no opinion. See, MicroStrategy is a security. I'm not going to give you my forecast for that. Right. That's governed by securities law. I have civil liability, criminal liability, right? If I tell you something that I thought was right and it turned out to be wrong, I get sued. But if I told you I thought you should have a chicken and own a house, and it turns out I was wrong, and you buy a house and a chicken, and the chicken pecks you, right? And it gives you a disease and the house burns down and you sue me. You're like, well, that's property, right? I'm sorry it turned out badly. Right. But there is an ethical and a legal distinction between me giving you advice about property and endorsing property versus endorsing a security. So Bitcoin is this dominant digital property. And I don't think it should totally replace physical property. I think you should own some physical property. And I think it's okay to own a business. You have your own business. You could have your own business that you run, and you could own shares in somebody else's business if you think you understand them, and if you think that they're good and they're going to grow and be more successful than and they're going to stay ahead of inflation, then that's good. If you owned a business in Zimbabwe and I told you the currency is going to zero, or if you owned a business in Venezuela, I would say probably not a good business investment, right? So businesses can be in hostile currency regimes or hostile political regimes. If you owned a business in Cuba in 1959, and you ask me my advice, I'd say, well, that's kind of risky business. You might lose everything, right? So a business is risk, so take the risk if you understand what you're doing. Physical property is to eat and live on and drive. Okay, fine. You're a physical person. Digital property is a way to store your life force, to store your life savings. It's like a bank in cyberspace. Now, which bank? Well, Bitcoin is, I think, the most secure bank in cyberspace. It's run by incorruptible software. There are other places to store money in cyberspace. All the other cryptos, they're all more risky, in my opinion, and some are extremely risky, and some are somewhat risky, and some are less risky. It's like you have to analyze them and decide how much risk do you want to take based on the return. And that's an individual decision. Bitcoin itself, though, Bitcoin is, I think, the apex property of the human race. It's the least risky, best idea we've come up with in 10,000 years. And you couldn't know that 10 years ago. It's every year for the last 12 years, we're getting more information. It's becoming more hardened. It's becoming more seasoned. What Nicholas Taleb would call Lindy, right? It's like a house that stands for 100 years is probably well built. A house that you built last year and you promise me it will stand for 100 years, it's not clear. What would you rather have? A house that stood for 100 years or a house that stood for 1 year where I've got 1,000 pages of reasons why it ought to last 100 years?
Yeah,
like I can't be, one of them is a security, the other is a property in a way, right? It's unclear. So Bitcoin it's the most robust, resilient, well-engineered, dominant crypto asset network that humanity has created, and that's why it engenders so much passion.
I want to hit on the risk of Bitcoin and crypto. I think before we get into the risk, because obviously there is a risk element to it, it would be best to talk about two things. Number one, what is Bitcoin? Like, if you had to describe that, what would that be? And then number two, and this has always been a question of mine, what in the world is mining? If there's 21 million Bitcoin and we know that, when I hear mining, I'm like, oh, we're trying to discover, we're trying to unpack, we're trying to make accessible. So if we already know that there's 21 million, then what is the mining process? And then from there, I think we can get into the risk element of it.
Okay. Let's say I wanted to create perfect money. God came down from heaven above and gave us perfect money. Okay, what would that be? Well, that would be some number of tokens. Let's pick a number, 21 million tokens, and subdividable by 100 million each. So if I came up with 2.1 quadrillion tokens, it doesn't matter how much it is. It just needs to be a fixed amount, 100 million.
Right, it's an arbitrary number. Sure.
So God says there's a fixed amount of tokens, and when you owe me money, you pay me. And when I owe you money, I pay you. And God creates a ledger. And there's a central ledger, and everybody in the world knows what it is, and it's incorruptible. It's what we call an immutable shared ledger. He's making a list, he's checking it twice, right? Perfect. You can never lie. I can never lie. Someone that owes you money has to pay the money, right? And it's a deity, incorruptible, keeps track of it. That would be perfect money. You work your entire life and you save your money. And then if the economy grows, if it doubles, since the money is fixed, you would have twice as much wealth. If the economy grew by 3% a year and the money was fixed, every year, whatever you own would buy you 3% more, and the price of everything would go down by 3% a year if you had just a complete fixed money supply. This is the theoretical perfect situation. But in the real world, we don't have fixed money supply. And, the current world, we print $1 trillion, and then I get up one day and I print another $1 trillion, and the money supply doubles and the price of everything doubles. And if you had money in the bank, it's only worth half as much. And what happens? I took half of your money and I gave it to myself when I printed
Right.
the money. And then I
Or
give it to my
distributed
friend.
it somewhere else. Right.
So in the fiat world, anybody in charge of the government can take an arbitrary amount of your money, and they can, and by the way, not just the money you have, I can take half of everything you're going to ever have. Like I can take
Sure.
half of everything you will ever be, right? When I devalue the currency by 50%, that means your salary, $82,000 a year, is only worth $42,000 a year for the rest of your life. I took the next $800,000 worth of your salary away from you in a heartbeat. And the only recourse you have is walk into your boss's office, knock on the door and say, give me a raise. And
Ask
if your
for a
boss
raise.
says no,
Sure.
you lost your job and you lost half the, you lost all the money. So you either lose half your life work or you lose all your life's work. So that's an imperfect monetary system. Bitcoin is an attempt to make a perfect monetary system. If God's not going to run our money supply, what's the next best idea? The next best idea is I write a computer program that keeps track of 21 million coins and lets you divide them into 100 million Satoshis each. So the computer program keeps track of the money supply. And whenever I send you money, the computer program keeps a track and debits me and credits you.
And I think the key here is that no one person owns the ledger. It's public, correct?
Yeah, the ledger is shared, right? The shared part is anybody can, take a $200-300 computer and they can run a Bitcoin node and they can see the entire ledger, every transaction in the world from now to the beginning of time. So you can have the full ledger and I can have the full ledger. So it's completely transparent. And anybody in the Himalayas can have the full ledger. And so it's open and permissionless. Nobody can stop anybody from knowing the truth. Okay.
Mm-hmm.
That's the first part. And the second part is the immutable part. How do I keep someone from corrupting the software? If the software is programmed by one programmer, they might cheat. If it's running on one computer, they might cheat. So the way that Bitcoin becomes immutable is through decentralization, or this technique of letting anybody in the world run the ledger and letting anybody in the world mine the Bitcoin. And then the software ends up distributing over millions and millions of computers everywhere in the world. You end up with hundreds of millions of people with millions of computers, and it's all running the same software. Now, if you're a diabolical, evil genius programmer and you write some new software, no one's going to use your software because they don't have to run it, right? So you can write any software you want, but no one's going to run it, right? And the network doesn't change very rapidly. They're very, very slow, like once every 4 years. And everybody in the community has to all agree that they like the idea before they change the nodes. Then everybody has to change the software on their node. So what you have is when you're running a node, you're actually running an altar to freedom and truth, right, in your home. And when you're running a Bitcoin mining rig, what is a Bitcoin mining rig? It's really the security node for the network. There are millions and millions of computers. They take energy, they convert it into SHA-256 hashes, or an encrypted energy stream. They're hashing continually. We call it a hash wall. Now, that hash wall is protecting the network, or the tip of the network. If you want to, every 10 minutes, we update the ledger. And if you want to actually create the next block of transactions, you have to win that SHA-256 lottery. You have to be the winning node. And the only way you do that is compete with the other millions of nodes to actually build that block. And nobody knows which of those computers will win. Then you have to keep winning because it's not until about 6 more blocks that eventually the transaction becomes deemed as permanent. And then miners don't get paid until many blocks after that, like 100 blocks later. So the mining network is the security network for Bitcoin. And the people running those miners get compensated in the Bitcoin. So as the Bitcoin price goes up, the economic incentive to mine the Bitcoin goes up. And then the amount of investment in the Bitcoin mining rigs goes up. So right now, that's about something on the order of a $15 billion a year industry, anywhere from 15 to 20 billion. And so people will go ahead and invest billions and billions of dollars in the mining rigs and then build out data centers so that they can run the Bitcoin mining protocol. And if you wanted to attack the network, you have to buy yourself billions of dollars of equipment, and you have to set up the data centers, and then you have to get more than 51% of the network to have a 50-50 chance, right? Which is pretty difficult.
What I'm
and
hearing
even
you
then,
say
it probably
is,
it doesn't work for you for other reasons.
what I'm hearing you say is that if you wanted to hack the system, let's say, you would need to hack billions or millions, I don't know what the number is, but let's just say million. You could probably tell me what it is, of ledgers available. And the more miners that are out there, the more difficult it becomes to own 51% of the information, for lack of a better term. That's what I'm hearing you say.
If you wanted to attack the network, it's going to take you 4 years and probably $100 billion. And then you'd have to do it without anybody noticing. But there's 250 million people that if they actually knew anybody had a plan to spend $100 billion on a 4-year effort to undermine the network, it would be all over Twitter in like 30 seconds.
Right.
So it's not an easy thing to do. Right.
What is the risk? What is the risk with Bitcoin and crypto then? Because we've talked a lot about the risk for these others, and that has a proven track record of being the actual risk. What is the risk associated with some of these cryptocurrencies?
Well, I mean, the risk on the other cryptocurrencies is most of them are securities, which means that they could all be, they're all centralized, and there's some party that controls the protocols. So I wouldn't really recommend anybody buy the other cryptos. I mean, the other cryptos are securities. It's kind of like if you said to me, give me your stock recommendations. Well, I mean, there's 10,000 stocks, there's 10,000 cryptos, give me your real estate property investment recommendations. There's 10,000 buildings you could buy. Okay, I'm not telling you can't make money investing in real estate, investing in crypto, and investing in stocks. I'm just saying they're all investments, right? Bitcoin itself is unique because it's the dominant digital property network. I don't view it as an investment. I view it as a saving strategy. And the risk is, well, one black swan, the unknown, right? We don't know what it is, but you could imagine some unknown, and you got to allow for that if you're intellectually honest. The other risks generally are volatility.
What would it be? Sure, volatility. I want to get to that, but like you say, the unknown. You're obviously well versed in this. If you're looking at it as an expert in Bitcoin, what could you foresee that unknown being? Like, what could you anticipate that potentially it could be?
That's my point. It's an unknown. If I could anticipate it, I'd tell you what it was. It's literally a black swan. It's like an unknown. That's the risk. Let me say it a different way. I think that Bitcoin's less risky than everything else in the world. Like, if you understand the engineering, it's less risky than buying a building. It's less risky than buying a share of stock. It's less risky than buying a car. It's less risky than buying a plane. It's less risky than any other crypto. It's less risky than buying a bar of gold. So, you can't say there's zero risk, because there's risk just to living on this earth. We can all get hit with an asteroid and life on the planet ends tomorrow. But it is digital property. And at this point, we know enough to know it's the dominant network. And it's the network that's best engineered to be a long-term store of value. All the centralized networks are securities, and so they're subject to regulatory attack, and they've got corporate risk and competitive risk. All the other cryptos, most of them are also securities, and so they've got the same issues with them. And the ones that aren't securities, if they're identical to Bitcoin, they've already been subsumed by it, and otherwise they're functionally trying to be something different. And so if you're trying to be something different, a smart contract platform, an NFT platform, a DeFi platform, then you've just got more moving parts. And that means more things to break. And that makes them investments.
I mean, from the outside looking in, I think the most advantageous component of this is decentralization. It seems to me that anytime one party gets involved or one organization gets involved, there's a high risk of corruption of the data and then all the value that comes with it.
Yeah, I would say my characterization is Bitcoin is a bank in cyberspace run by incorruptible software. It's offering a global, affordable, simple, secure savings account for people that have neither the means nor the inclination to run their own hedge fund. If you're looking for a bank in cyberspace run by software, that's what Bitcoin is. The thing that makes it incorruptible is the decentralization. So the most important thing about it is that it stay distributed and decentralized, and that it's simple. As things get complicated, they centralize. If you have to update the software every month or every quarter, it becomes centralized. Right? The whole beauty of Bitcoin is the simplistic notion that we're just going to keep track of the ownership of 21 million coins. That's all we're doing.
Period.
And in 100 years, what do you want it to be? The same thing. In 1,000 years, the same thing. Is that valuable? Yeah, that's like worth half of everything in the human race, right? That's just what we're talking about as a pure energy reservoir. You're basically storing your energy in an incorruptible, basically a shared immutable ledger. Is there value to that? Yeah, of course there's value to that. The other half of the human race is, creating things, making products, creating food, providing services, right? There's a lot to be done in that area. And so simply running a bank, a uncorruptible bank, doesn't solve the problems of humanity. But given the fact that the money supply is currently toxic, and given the fact that banks are currently inexpensive and defective, then curing the problem of money and curing the problem of the bank is a pretty profound leap forward for the human race.
Where do you, as we kind of wind things down today, where do you see somebody who's listening to this and says, this is starting to make sense, I need some more information? Obviously, I want to direct them to what you have available, but where does somebody start on this path if they've not already taken the first step or immersed themselves to some degree in this world of Bitcoin?
Yeah, good points. First of all, I would say that you shouldn't do anything in the crypto world, and you shouldn't do anything with Bitcoin until you've spent the time to study it and come to your own conviction. Luckily, there are a lot of good resources. I have a website, hope.com, H-O-P-E. And on hope.com, we've curated all sorts of videos on the subject. We've got a list of books. There are great books on this, like the Bitcoin Standard, the Bullish Case for Bitcoin, et cetera. We've curated resources and papers and research. There are courses. There's a Bitcoin for everybody course. It's free. You can find a link on the website. There's a course taught by the current head of the SEC, Gary Gensler. It's on the website. So lots of courses. There are lots of leaders you can follow, right? And there's also lots of websites to keep track of this. So if you go to hope.com, that's one place. Obviously, you can go on Twitter. You can follow me on Twitter. I post a lot of stuff. I post commentary on political developments and market developments every day on Twitter.
Which I really enjoy. I really enjoy your Twitter feed, by the way.
And I think that the right way to think about this is once every 30 years, there's something new and profound in the world that you should probably spend 100 hours studying. Like in 1900, it was like electricity. Around 1930 or 40, it was like commercial airlines, or maybe atomic power came along. And when the nuclear warhead came along, you probably should pay attention to it. And then came along radio and television. And then 30 years later, the internet came around.
Internet,
and computers.
Sure. Social media.
So we're kind of living in a world today where digital energy, digital property, digital money, right? These are the things the crypto revolution stands for. It's the digital transformation of three ideas that have always lived in the analog world. And most people, they don't know to look for them. They can't really conceive of digital energy or digital money or digital property. Like, it takes a while. It's not a 1 hour thing. It's like a 100-hour thing, maybe a 200 or 300-hour thing. But, you understand the power of YouTube and social media, right? You're in the business.
Right.
If I described, digital video and, you're watching your cable television show, or you're watching, CBS when we were broadcasting it to rabbit ears, antenna. And I said, one day there's going to be this digital video and anybody can broadcast themselves, from anywhere to anywhere. You're like, I don't get it. How's that going to work?
That's
like,
the exact same thing I said when somebody introduced me to Facebook. I don't get it. That's stupid. And here I am, using Facebook and all the other social media platforms out there.
Yeah, so we're kind of like at that stage in our life, and I would encourage people to dig in, spend some time to understand it. It'll take you down a rabbit hole, and first you'll start to understand macroeconomics, this issue of what is inflation. And by the way, there's nothing to be ashamed of. 2 years ago, I thought inflation was 2%. So, and I was running a publicly traded company. But over the course of 24 months, I realized the inflation rate for 100 years have been 8% in the dollar and 16% in other currencies. So you'll start to figure out macroeconomics aren't what you thought it was. And then you'll start to think about, investment theory. There's conventional thoughts about investment, 60-40 portfolio, put 40% of your wealth into bonds. Well, bonds currently generate 2% yield, and there's an 18% increase in price of houses, and that's a negative real yield of 16%.
That ain't going to work for you very long.
So conventional thoughts about investment need to be challenged. Conventional thoughts about inflation need to be challenged. Conventional thoughts about property. I'm just going to go buy a house. Okay, well, that's one property. It's not the only property, right? And then you're like, well, I just don't trust it. It's like, I give you an MP4 file and it's got Beethoven's Fifth Symphony in it. And I tell you, I'm giving you music, digital music. Well, I don't get it. Of course you don't get it because you haven't played the file, right, on a computer. Now, so yeah, of course you don't trust it. People didn't trust Google Maps. People didn't trust the iPhone, right? People didn't trust Amazon, right? People didn't trust Google. Of course you don't trust it. You should be skeptical. Everybody's skeptical. I was skeptical. You were skeptical, right? The only real question is, do you need it? And are you going to take the time to figure it out? If you don't need it, you won't take the time to figure it out. If you do need it, and you live in a country where the currency is going to zero, it's a life or death thing, right? It's going to save your life if you need it and you grab it. And if you don't, then you're going to lose everything, right? Should you need it. And hopefully you won't ever need it too much, but the world around us is a very complicated place. And I think a lot of us, are pretty surprised to see what happened in the last 24 months. One thing that's pretty clear is in the aftermath of the Canadian trucker crisis and the Ukraine war and all of these asset seizures and the breaking down of the banking system and hyperinflation, a lot of people are questioning deeply seated beliefs that they once had. And there's never been a time when the ROI on education, especially financial education, was higher, right? Now's the time to open up your mind, allocate some hours and learn some new things, and once you've come to your own opinion, do whatever you think is best.
Well, and also the barrier you talk about the importance of financial education. The beautiful thing is the barrier to entry has never been lower. And that's an amazing, that comes with the decentralization of the internet. And that's a beautiful thing as well.
Used to be you had to pay $75,000 a year for an MBA education or an undergraduate degree. And most of those courses I took at MIT, now we've uploaded them. I've got a website called Saylor.org. We give away free education, free college education. You can go to Saylor.org and get the same lectures for zero. So there's really no excuse for not educating yourself, because the variable cost of the information has gone from 75 grand a year to zero. You just got to decide how to spend your time, right? And maybe the great challenge for all of us is there's too much content. We've only got a certain number of hours in the day, and everybody's got to figure out who do they trust and how do they want to spend those scarce minutes. Because you can sit and you can binge watch chess games 100 hours a week, and you won't get through them all, right? You can binge watch anything, right? Anything at all.
So we're going to sync everything up so the guys know where to go. But I do have one more question. And that is, I'm very, very curious because I've seen it in the videos, the story behind of the ship behind you. I'm curious about that.
Yeah. In the 17th century, the Dutch East India Company had an empire, right? And the Netherlands was one of the richest countries on earth. They developed a banking system. They developed a mercantile network. And ships like these sailed all over the world. This is a Dutch, merchant warship. It's part warship, part merchant ship, and extraordinarily beautiful, intricate machine that channeled energy, explosive energy, as well as wind energy to change the world. And in the 19th century, some people made a handmade model of it. This is a 19th century antique model of a 17th century Dutch warship, and it was given to me as a gift. So I keep it, as a reminder, right, of the power of human beings to create incredibly intricate machines, right, to better their condition.
It's very cool. I knew there had to be a story behind it, so I had to ask about it. Well, Michael, I appreciate you joining me. This gives us a good primer into what it is we're talking about. And guys, highly encourage you to go check out his stuff, see what he's all about, see how it might serve you, and get yourself educated. Michael, thanks for joining us today. Appreciate you.
Yeah. Thanks for having me, Ryan.